This is the One Brokerage. How can I help?
Hey there. I actually heard about you guys, and I've got a property that I was looking to finance. I was hoping someone could help me with it.
Awesome, exciting. Tell me about it. What are we working with?
Well, it's 150 square feet, solid craftsman work, amazing carpentry work. It's got incredible views, no close neighbors, no HOA, fruit-producing elements, a sheer vertical staircase, and it's 80 feet off the ground.
Well, hold on. Are we discussing a treehouse here?
Yes, we are. And not only that, we've got 9 other properties that are difficult to finance in today's episode of Mortgage Monday. All right, Christian, welcome to Mortgage Monday. Let's get into this thing. We're going to be talking about properties that are difficult to finance and if there is hope for them or if you should just give up and just pay cash or never buy them at all. So we've got 10 properties to go through. Number 1 are mixed use properties. What are these?
Yeah, mixed use. Pretty straightforward. A property that has 2 different uses, typically residential and commercial. The most common one of this is a downstairs, maybe office or retail shop with apartments up above it, right? This could be anywhere from a 2 to 20 unit property, but typically we're talking about the 1 to 4 unit space. So the most typical one we see is a office downstairs with 2 or 3 apartments above it. Very difficult things to finance because most loan products are strictly residential or commercial in nature. Don't want to say it's impossible. Just if you're specifically targeting a property type, buy an office for an office and an apartment for an apartment, right? Mixing them, you just really limit your access to good loan products.
And I'm assuming this would be because lenders want to know if this goes to crap and we have to foreclose, who are we going to sell it to? And it's difficult to find a buyer that's looking for office and warehouse and inventory and whatever. Most buyers are looking for something that's one use or an area that's zoned for one use versus mixed use. You just have less people that are looking to buy it, right?
That's exactly right. Yeah. And typically, if a borrower is to default in mixed use properties, usually they're occupying the business. So like the most common is like the store owner who lives above his store. So if the store owner defaults, not only is the commercial space, the investment property portion of it failing, you also have a non-paying tenant living above it, which that's a double whammy there, right?
Yeah, and that's tricky because they can be easier to get into. You want to go buy it because it's been sitting on the market forever because there's less buyers. You're like, oh my God, I got this great opportunity. There's seller financing. I love it. But then the bank may not love it because it's going to be harder for them to get rid of. All right, number 2 is rural properties. What is a rural property and why are these things so tricky to finance?
Yeah, man, rural properties can be the thorn in our side sometimes. And these are across so many different loan products. So just one thing to keep in note with this video, guys, this is kind of an all-expansive advice giving episode. This isn't necessarily broken down loan product by loan product. So don't just think this is DSCR or conventionals. But rural is basically exactly what it sounds. It's a property outside of city centers, suburban areas, urban areas, right? It's in the boonies, it's farmland, it's agricultural land, stuff like that. Maybe up in the mountains, right? And the important part is that what determines a property to be rural, and it's probably not what a lot of people think, it's actually done on your appraisal. If you bring us a property, the Smoky Mountains is a really good example of this. Most areas in the Smoky Mountains are not designated rural, even though it's a cabin up in the woods, because there's been enough buildup. If any of you have been to Pigeon Forge in Gatlinburg, that's a built up area, right? That's a main drag of a bunch of, entertainment stuff. There's a Dollywood, as a theme park there. And as long as the cabin is close enough in proximity to that urban center, typically the appraisal will give you the benefit of the doubt. But if the appraiser designates it as rural on the appraisal, the absolute minimum that can happen is an extra 5 to 10% down payment requirement. So your 20% down payment may go to a 25 or 30. And at the worst that can happen is you just get denied a loan. Once again, a property type that can make lending difficult.
Now, if somebody wants to write an offer on a property and they're not sure if it's rural or not, what can they do?
Yeah, you can run it by us. So we will give our best advice, but with full disclosure, we are not appraisers, right? We have seen our fair share of this now, and we do have a BPO department that can run kind of a theoretical appraisal on it. But it ultimately comes down to if we say it's good and the appraiser comes back and says rural, the appraiser is going to have the trump card there, right? The lender is going to go based off what that appraiser says. Now, we can contest it, but it's ultimately their decision.
Is there a scenario where a lender can ask an underwriter before the offer is written?
Not typically. And once again, because that appraiser holds the final stamp of approval. But once again, we can absolutely run it by lenders and underwriters and say, what's your best thought on this property, right? And we can give, we'll be right 95% of the time. It's just a hard thing to bat 1,000 on. right? It's not something that you're always going to have a perfect success rate on.
Okay. The next one is a sub 500 square foot property. Why are these so hard to finance?
Yeah, so these are the stereotypical tiny homes, the more unique, site built, maybe some unique Airbnb type properties. One thing to note, this is not an ADU. So even though you have a sub 500 square foot dwelling on your lot, that's not your main structure, right? What I'm referring to is a sub 500 square foot building when that's your only building. Right? When that's the case, the lender makes more of an argument that the majority of the value is in the land as opposed to the property. Because a 500 square foot's like a garage, right? Most garages in America are between 400 and 500 square feet. They want a house that's a little bit bigger than a 2-car parking spot. There's just not enough meat on the bone in terms of value in a lot of those small home situations to justify the lender giving a loan on real estate instead of giving a loan based off land, right?
And again, that's because if they had to sell it, it's hard to find a buyer
Absolutely.
That's looking for a 500 square foot property. The next one is SB9. Let's talk about that.
Yeah, so SB9, I know of it. I'm very familiar with it in California. There's, equivalents of this happening all over the country. This is basically the ADU and the junior ADU laws that are coming out that you can kind of just build a bunch of accessory dwelling units on your property now. The biggest thing that I hope people realize is that if your state allows something, it doesn't necessarily have to line up with what federal lending guidelines allow. And the most common situation of this is a house in California where you have approval to build an ADU and what we refer to as a junior ADU. Those of you in other states, this may sound like completely foreign if you don't have a housing crisis in your area. California does. So now our governor's come out and said, you can build an ADU, a junior ADU, and they're even considering a little flat besides that, right? A little cottage on top of it. In that case, Fannie Mae and Freddie Mac guidelines only allow for one ADU per property. So it's possible you're completely within your state's build guidelines, but you disqualify yourself from federal lending guidelines, which doesn't mean you can't do it. It just means you won't be able to get conventional financing after the fact. So you can kind of build yourself into a rock and a hard place, right?
So you're going to have to go after a non-QM loan in that scenario. And then you have to hope that that non-conventional lender is okay with this specific property.
And not just you, anybody who you potentially sell to. So it limits your buyer pool in the case you go to sell it, right?
That's the principle that I always talk about. If it's easy in, it's hard to get out.
Absolutely.
If it's hard in, it's usually easy to get out. All right. Next up is container homes. What are these?
Yeah, container homes, new fad, the big shipping containers that you see on the back of the big rigs on the highway. It's kind of become a trend now where people are taking those, refurbishing them, and just throwing them onto a lot and putting utilities into them. Very cool. I think a lot of these look awesome and they're very unique and cool projects. Getting conventional financing to ship a shipping container and throw it on a vacant lot and plug in utilities, lenders aren't going to like it, right? I'm sure there's some private money funds or some personal loans that you can do. You could take advances from credit cards. You could do, business financing, other things like that. But we're mainly referring to real estate, agency debt and institutional capital. And in terms of that realm, which is the realm that I work in at the one brokerage, we're not going to be able to finance the buildup of your container home, right? It's just something that is very unique, very different, unless you're financing it like as a business pursuit instead of a real estate.
Now, these properties may be hard to fund, but what's not hard is getting great investing education and resources to help you on your journey with BiggerPockets.com. You can do that by taking your investing education to the next level by going pro today. Pro gives you the tools and resources that you need to be confident in this market. Unlimited calculator reports to assess deals and estimate rent, free lease agreements for all 50 states, plus pro-specific content so you can stay up to speed in today's ever-changing market. And there's no risk. Your pro membership comes with a money-back guarantee. Yes, that's right, a money-back guarantee if you don't like it. Go to BiggerPockets.com/GoPro today and enter coupon code PROMortgage to receive 20% off of your first year of pro. That's right, because you're listening to me and I love you, I'm making sure you get 20% off your first year of pro using discount code PROMortgage. Be confident in your investing. Go pro today. Okay, this next one is very interesting. I wouldn't have thought I would ever see this on a list of 10, but they are becoming more trendy. Number 6 is treehouses. What are these and why are they hard to finance?
Yeah, I knew you were going to laugh at this one, David. So the treehouse that I'm referring to is not the one that you built when you were, 8 years old with your grandpa, right? If some of you guys listening haven't seen these things are wild. I know Rob would probably talk about these for days. These are legitimate buildings that people are building in the trees, right? And they are amazing structures and feats of engineering and really cool places to have for like a vacation home or an Airbnb. But once again, in the same realm of thinking as container homes, they are a unique property. You're going to have problems with comparables. You're going to have problems with the safety and security of the property and the standard, built and permitting nature. You're going to have problems with them probably being rural, right? Where are you able to build a fully functioning, residential treehouse? It's just the same argument, right? Unless you're financing it like as a business pursuit, it's not something you're going to get standard real estate debt to build or even refinance if it is built.
This is good to know because these are becoming more and more trendy, especially with cabins and Airbnbs. People are adding a tree house that will increase the revenue oftentimes on the property. But like we said before, it's hard for appraisers to find comparable sales that have tree houses. And anytime you have a lack of comparable sales, you usually don't get the value added to your unit. This applies with ADUs, it applies with pools, it applies with tree houses. So you won't be able to sell it as a separate entity most of the time, and you won't be able to get added value. So be careful before you spend a bunch of money on something like a tree house, because though it may increase the revenue of your property, it could be 5 to 10 years before you get that investment back. All right, number 7, sub $500,000 commercial properties. I notice these are on the market a lot, and other people see them too, and you can think, oh, this is an easy, great way to get into the commercial space because it's a low price point and I feel safe. But there's a reason why they're there. What have you found with this, Christian?
We just did our episode about us doing commercial lending now. I feel like this is important to put out there. In the commercial world, if you guys just think of a starting point, it's usually going to be $1 million on the low end and up to the hundreds of millions for big institutional players. When you're trying to finance, I just think of one that we got today. It's like a $300,000 post office, right? In a rural area, I think it was in Indiana or Mississippi or something. Those things are almost impossible to finance with 99% of lenders' loan products out there. If you guys are working on a sub $500,000 commercial purchase, especially in a rural area or a smaller city, there is a one branch local bank in that jurisdiction. It is the Santiago County Credit Union, right? Wherever they're at, right? Walk in those doors, talk to the one loan officer they got in the branch, and run that deal by him. That is your best chance of getting those financed. In our world of nationwide financing and institutional capital, finding a lender to leverage $300,000 to not make very much on it, taking a shot on a post office in a rural town, the odds are slim to none. So anything in the commercial realm, which is, industrial, warehouse, offices, anything like that, those are local banks all the way.
Yeah, and those are very hard to find. It's kind of like when someone says, how do you find an off-market deal? Well, there isn't an off-market. That would make it a market. It doesn't work that way. It could be the same way with finding lenders that will put deals together like this. Okay, number 8, domes and Geo Properties without comps. What are these?
These are fun ones. I think of my buddies, obviously, Rob Abasolo, who hosts the podcast with you. I also think of his buddy, Kai Andrew, who I help out with his lending. And both of them recently actually just brought a dome property to us. And once again, you guys will notice kind of a trend here with the tree houses, the container homes, the domes. The same problem is going to persist with those. Where are the comparables, right? When the appraiser goes out, is he going to have anything to base that value off of, right? How many domes in the area have sold in the recent 6 or 12 months? How many properties built into a hillside have sold? Typically, those are unique, one-of-one type of properties. There's no, cookie-cutter builder. There's no Leonard Homes or Toll Brothers, right, who are coming in and building dome homes, right? That's not happening on a grand scale of things. So it's going to be the same issues with the other topics. It's just things with no appraisals are not going to get financed with institutional money. That's going to be private money financing, money from grandpa or cashing out of maybe another property that you have to have fun with your side project.
All right. Number 9. Lighthouses. This is a bummer because I've been planning on buying a lighthouse in mid-2024. It's very romantic. I figured that this would be the best way to find a girl. And you're pretty much rubbing salt in my romantic game going into 2024. Tell me why it's going to be hard for me to finance the lighthouse that everybody is seeing in the Nicholas Sparks movie and Girls Love.
That's hilarious. Well, I'm sparking a little bit of dirt in your wounds here. Let me also give you a little bit of fairy dust. I will share that we just recently financed a lighthouse. However, it was an extremely unique situation. It was a lighthouse that had actually regone complete zoning with the city and state to be turned into a boutique hotel. Okay, so it was completely residential in nature now. It was hospitality. It was no longer a lighthouse, but it looked like a lighthouse. I just thought this one would be funny to add to the list because it's in the same category of unique properties. I can promise you will not find 3 comparable lighthouses that have sold in your area. It's just not going to happen. right? But in the event you find a lighthouse that has been completely converted with zoning, permitting, and everything to be a different type of property, and the city and state have approved it, if that can be compared to other types of properties now, then I'll say maybe, David, you may have a chance to your romance novel, right?
So you're telling me there's a chance.
The next BP book, David Green's Lighthouse.
All right, number 10, unfinished basements and ADUs. Why can properties that have these be difficult to finance?
This is the one that we'll end on. This is our 10th topic, guys. However, this is not necessarily something that makes a property unlendable. This is something that I wanted to add to this list because it can change financing significantly. What a lot of people do, they take a lot of the advice that we've given, David, right? So go find properties with unused space that you can expand. Go find properties with a garage that can be converted to an ADU. Go find properties with an ADU. Go find properties with whatever, right? All the advice that is very good, proper advice to maximize the value of real estate. But what they do is they take the square footage in the area. Let's say it's $250 per square foot, and they say, oh, there's 1,000 square foot basement. 250 times 1,000. That basement adds $250,000 of value. That means I can add, I can offer $250,000 above what the house is worth, and the lender will approve that, right? Not necessarily. Whenever you have an unfinished space or an ADU or anything that is not within the standard stick-built property, the appraiser is not required to add the same price per square foot to every part of the property if he determines it is not, equal representation of the value. And that makes sense, right? If there's a one bed, one bath ADU, is a family of four going to have more use if that one bed, one bath ADU was just attached to the property as an extra bed and bath? So now your 3-3 is now a 4-4? Or would more families want a 3-3 and a 1-1? Well, investors would, but a family of four would probably prefer that fourth bedroom that's attached to where they can watch their kid. You can't just treat that property as, oh, extra square feet, that just adds. And we've seen this countless times where borrowers review an appraisal and they say, I only got $75,000 of value from my ADU and it costs $150,000 to build, which is why I love the advice that I hear you give all the time, David, that when you're going to build an ADU, see what that money would go buy you in another property before you dive into the ADU, right? Because it's possible you're going to get a bigger bang for your buck somewhere else in terms of price per square footage. And that's absolutely true with these two topics, unfinished basements and ADUs.
All right, there you go. 10 properties that are difficult to finance, and you want to do some due diligence before you just run out there and try to buy one. Christian, do people have questions about other properties they may be trying to finance? So they want to learn more about these 10. Where can people get a hold of you?
All social medias at The One Broker, or our classic website at The One Brokerage now. Y'all know it. Log in, contact us tab at the top right, ask us questions. We love helping out.
All right. And you can find me at davidgreen24.com or at davidgreen24 on your favorite social media. Send me a DM and let me know what you thought about my plans for romance in 2024. Also, we'd love for you to comment below on this video. Let us know what you thought. If you missed anything that should have cracked our top 10, have you had difficulty financing something that no one told you would be a problem? Let us know and we will make sure to include that in a future video. Thanks everyone. If you've got a minute, check out another BiggerPockets video. And if not, we will see you next week on Mortgage Monday.